Hello, Mish, and happy Thanksgiving week.
Yeah, I'm so
And
excited. Break.
you've got a treat here for Thanksgiving. Not a new idea. You've been talking about this one for weeks right now, so I'm going to jump right onto XRT here. We're looking at weekly charts this week for reasons that will become more apparent after this chart. But what's going on with XRT here? What's your next move?
Well, first of all, hi Jeff and hi everybody. It's so funny with this whole grandma retail, right? Because actually feel like if I keep pounding the Modern Family home enough, eventually if they prove why they're so valuable, right? Like last year was the KRE collapse. And then it's this year, all the conversation about rotating into small caps, transportation, and retail, the inside sectors. And I've had a year of talking about the vanity trade and granny retail and how important, and maybe the only real important sector, if you really want to see this market remain bullish and see how consumers react to all of the new administration policies that could take effect, from putting money in their pocket to making costs more expensive with tariffs. So she says it all, right? So what did we talk about, Jeff? And on media for months, I've gotten these quizzical looks as I've talked about the beauty trade, the diet trade, the thin trade, whatever you want to call it, as a result of, I called it the vanity trade, as a result of these diet drugs, and that this is where you are going to see the new consumer emerge. And then there you had it, the most beautiful 10-month consolidation, actually almost 11-month consolidation as we're nearing the end of November. I think maybe that I'd ever seen. So look what happened. I was all over the place saying, don't think, don't look at headlines, don't worry about anything, just hold your nose and buy, right? And so that's exactly what I think a lot of people who follow me did. Yay, congratulations if you're one of them. And we did as well for the fun. We bought the first tranche and it cleared over 80, only a little bit. And then last week, when it was obvious that we were going to close the weekly over that whole consolidation, there you go. So what do we get this week? We get a gap up. I mean, could it be more beautiful, Jeff, than that? I mean, right now I'm like, yay, yay, yay. But that doesn't mean you forget about risk and target and all that other stuff.
Well, I don't think it could be more beautiful, but there is more beauty to this pattern, right? Because you had your initial breakout over 80, and then you retraced, right? You can't see it very well on this chart, but this red line is basically your 50-day moving average. It's a 10-week moving average, and it pulled right back to that level.
Exactly.
So when you said you added your second tranche in here on the close, the weekly close.
I actually did it on Thursday last week when it was obvious that it not only did that 50-day moving average, or in your case, the 10-week moving average hold, we knew our stop where it was now, that we were going to put it under there because that would be a failure. And when it got back up over 79.50 last week on that last Thursday, that's when we started adding and saying, okay, we have such a tight risk, we can go full position.
Yeah, so if I pull up the daily, you can see the 200, I'm sorry, the 50-day moving average is this blue line here. So yeah, you have that one close above 80, and then it pulls back a little with the market, right? So the market pulls it back, but it holds right at support, not only at the 50, but at these prior highs here. And so yeah, on the way back up, um, yeah,
Well, you
it's
had a gap
a
up on
thing of beauty. Yeah.
you had a gap up on last Friday. So yeah, I mean, there's only been two times in the history of my telling people what I think and recommending that I've ever said, just hold your nose and buy. The first was gold when it got through 2100. And now this one here, XRT, when it got a weekly close over 79.20. So it's not a statement I make too readily, but clearly, there's physics here, right? When you have that level of compression for that long, sort of in this inert gas, if you will, finally explodes. It's like you shake a bottle of carbonated water and then, and that's what this was.
Yeah. All right. So what now? Let's go. Do you want me to go the weekly or stay on the daily?
let's go to the weekly because we don't have historical information. Because now, of course, my mind as an active trader is, oh, so where do I take my first profit? Clearly now I would not turn this into a loss. So if it breaks back down under, let's say, the weekly close of last week, I'd probably be like, okay, this was not, this was a fake out. A lot of buying came in and it's not going to sustain. So that's the first thing. I already know now I'm not going to lose money on this trade, right?
Right.
Secondly is, okay, so now you have to look left. We've talked about this so much. Look left to make your decision on the right. So
Right.
now if we go back to where we had the last price action at these levels, you were looking at 2021. And so what I like to do is look at the consolidation bottom as my right. So if you just put a horizontal line through there, we're kind of like right there right now, which means two things. We blow through it, and that's great. Or this was just like a 2-day rally. This market has done that. We've seen this 2-day rally, and then it turns around and gives everybody a good crying jag. So to me, this was a good resistance area, but not enough for me to take a profit because I feel like we got to get more out of this. I'm willing to give it a bigger shot, but so that's why I'm looking more around the 80, exactly where you're throwing your line right now is the 80.
Yeah. So I'm drawing it here because, well, let me finish. Because one, you've got some highs here,
Mm-hmm.
but also it's a round number. It's 90, and
Mm-hmm.
you might not be able to see it, but this is the high, which actually is almost the inverse of what we saw happen here, right? This broke down out of this consolidation, then it rallied right back up to, well, essentially the 50-day moving average, but in this case, the 10 right here as the kind of the backfill and then fell apart in the same way we saw that here. So that last gasp high before the collapse, that's what got my eye. So that last gasp, this initial high, and the round number all point to 90.
Yes, and that's exactly where I will take our first profit. It was somewhere between 89 and 90, unless, of course, we turn around. But if we turn around at this point now, I'm no loss, or I'm going to be looking for that $9 move from our average entry price.
Nice. All right, so we've got some in your daily today. You cover the vanity trade, so that's retail. So
Mm-hmm.
let's
This will be my
dive into that
epitaph,
one first.
right? We want this as my epitaph. Here lies Mish, the end of her vanity trade.
which ones do you want to? Well, we should probably start with new skin, right?
Yeah.
New skin on a weekly.
Yeah. Well, actually, before we do new skin, let's put up, because I've talked about so many stocks lately, Elf, Ulta, Novo Nordisk, and all these things had massive corrections. New skin has also a massive correction, has a pretty chart pattern, which is why I wrote about it today. But let's just take a quick look. Let's start with Novo Nordisk on the weekly chart because this is what I'm waiting. So I mean, there's two ways to go. There's just buy this stuff and put it away and think, oh my God, I'm a passive investor and I know eventually I'm looking out, kind of like what Druckenmiller Miller does, which he looks out 12 to 24 months and he doesn't care if something goes against him because he has his ideas for the future. Or you can be more of a market timer, which is kind of what we are. And so I have not traded Novo Nordisk yet. I almost bought it today. So this is a weekly chart. Now, this is a very different situation because you've got on the weekly chart, there's not much to look at other than a lot of support around that 100 level if you go back to 2023 in October, where it finally started to break out. So what it did for me was it retraced into massive support. So what's more interesting actually with Novo Nordisk would be the daily chart. So let's switch to a
Okay.
daily.
That 100 though, that and
That's pretty big.
$100 on any chart, you got to respect it. I mean, look at
Exactly.
that. That's
Yeah.
hard to believe, but
So we're not going to talk about this for a long time because I'm going to tell you exactly what's in my head and what I plan to do. I almost bought it today, but I didn't, and I'm going to tell you why. Can we just blow that out a little bit so we can see more recent? Yeah. So first of all, we had one of my favorite things is not only do you get to this nice $100 support level historically, but then you make a new low, and the next day you close higher on pretty decent volume. That's what happened last week. So we went down, we actually broke 100. I think the low was like 99 something.
Yeah, just barely.
Yeah. And then the next day, boom. So, some of you, and maybe, if it weren't sort of this time of year, I probably would have bought that day, next day, and said, okay, I have a really tight risk. So that's certainly valid. That's based on our reversal trades that we talk about all the
Right, this
time.
right in here.
Yeah. But let's say you didn't. Okay. So now you've got that, in this case, is that pink for you, the 10-day moving average?
This is 10-day, yeah.
And what's the dotted line on this one? Because I know in the weekly it was an exponential. What is it on this one?
It's going to be the 17 exponential in the daily too.
Oh, that's interesting because I
Yeah, it keeps
only,
it.
yeah. So, that is interesting because we were going to introduce to you today, and I did in my daily, the idea of the 17-week exponential moving average. I don't mention the weekly time frame on it, but if you are listening to this podcast, you deserve to know it is a 17-week exponential moving average. It's been on my weekly charts like forever. It's not the only indication I use, but often it's a really good opportunity to see that something truly has reversed in trend. So I can't tell you that I've back tested it on the 17-day, but it is interesting that it happens to be right here as you've shown it. So,
Yeah.
yeah. So what I'm planning to do tomorrow is that if we actually had a red day on a very big green day in this stock, so that tells me this could have been a gift or it could have been a fake out. Where will I consider it to be more of a gift is probably if it takes out Friday's high. And maybe it'll be interesting to see what it does with that 17-day exponential moving average, and we got a whole new thing to look at. If not, basically we can say what I do look at is the 10-day moving average. We closed above it on Friday, well, really touched it on Thursday, closed slightly above it on Friday. Today we kind of just held it. So that's really more what's interesting to me, and that's around 104.50. So if we open up tomorrow above 104.50, we still have a very tight risk to underneath the low, low, low. And we have a lot of upside in this stock as well. So because it's part of this is the company that makes one of the premier diet drugs. And I did find out last week, since I like to have a little bit of a fundamental story, that companies with 500 plus employees are starting to give coverage on Ozempic and Wegovy, one of the two made by Novo Nordisk.
Oh, wow. I didn't know
Yeah,
that.
yeah, that's pretty damn cool. So there you go. So you have the story, which got me interested in looking at the reversal. And now you've got, I want to clear the moving average a little bit more than this. So like around 105-ish. I think that having a $5.50 risk on this stock is probably makes a lot of sense because I think if it goes, you can easily see this go up, double your risk and possibly higher.
Yeah, you've got some room up to that 50-day and then a lot of room up to that 200-day.
Correct.
All right.
And I don't
Um,
expect this to happen overnight. This is all my 2025 vanity trade.
right.
All right, so let's go to let's go to New Skin now because yeah, I think we made our point with XRT, Novo Nordisk. We showed the weekly was but the daily was more interesting. Let's go to the weekly on this one, Jeff.
Yeah, I just wanted to see what it looked like on the daily with the moving average.
Well, it's had a phase change. It had a phase change on the daily. It went over the 50, so it's in a recuperation phase or a recovery phase right now.
Oh, yes. I meant on the 17 week.
Yeah, well, it kind of not
17.
not so much. I mean,
Yeah.
that's why I wouldn't put it in my daily chart. I keep it in my weekly chart. But on the weekly chart, when you have a phase change, but yet you see the 17-week exponential moving average, so pretty. This is about as pretty as XRT 11-month consolidation. Look at the last time this was over that 17-week exponential. So that was in 2022,
Yeah,
2 years
really.
ago almost. And look at the position of the 50 and the 200-week moving average. They were all sort of converging, right?
Yeah.
So when this thing broke down, it broke down everything. And it rallied a couple of times. It tested the 17-week, but it never got back over the 200-week. And since then, it's done nothing but go south, right? A couple of short covering bounces here and there, but really nothing. And so what I noticed is, first of all, I mean, I know Jeff hates when I tell a little story, but I have to tell a little story. You'll see it in the daily if you read it. New Skin is an American-made product. They got into big doo-doo a few years ago because they were like paying off some Chinese company. They paid a huge fine to the SEC. Then in 2022, Venus Williams got involved with them. It's a multi-level marketing scheme, right? So you buy it from somebody you know. She endorsed one of their products. It's kind of like a device that has all this stuff, but it is made in America and they're only doing American stuff. So with tariffs and vanity trade, it intrigues me now from a fundamental side because, it's skincare and diet and supplements, right? So here we are. So that has me looking at it. I see this beautiful 17-week moving average that literally for almost 2 years has not cleared. And I go, okay, we get a weekly move over this exponential moving average starter position. Why starter position? Because it really still has to clear that 50-week moving average. And we've seen, if you look at a lot of examples of this, you'll see that very often the 17-week may clear and then it stops dead in its tracks at the 50-week. Now, in this case, it's still a pretty good distance. We're talking about from 8 to what? What is that, 1150?
That's 11 and a half.
Yeah.
So, I
So
mean,
that's,
that's
I mean, you could do a
30%.
full position and you just, again, put your stop underneath the low, which is not that much lower. It's right under 6. So you're talking about basically a $2 range, a $2 risk. But I would probably do a half a position because I would feel like this company, they just reported earnings, by the way. They're losing money in terms of the revs, but they made money in terms of the sales. Amazing. So beat expectations. So there you go. I would buy a half and I would see what would happen. I wouldn't be so quick to sell this or take a profit unless it fails. And I would be looking to add to this position as we got into 2025 if it takes out the 50-week, because that's telling me now we have a stock that can go, that was sitting between 6 and 8 and really had the 2-year downtrend to maybe really popping up closer to where the cursor is right now, and even closer to that 200-week moving average. So
Yeah.
that's pretty, 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 pretty.
Before we go, we didn't talk about this before we came on. I'm just gonna go to the daily and see because I know we have real motion here. We're not going to focus on that today, but I can't look at a chart that has um, such a big bottom like this and wonder what's going on with real motion here. So real motion did come out over the 50 here
Mhm.
earlier. It's over the 200, so that's a nice divergence,
Mhm.
suggesting that this 50 should hold like it did. And then if I look at the 50, this is the one that would really interest me. We had a divergence here with the 10 going over the 50 in real motion before it happened here. So that too would be
Bullish
uh,
divergence.
bullish divergence on both time frames. So man, if this gets over that 17 week, which is around $8, it's got a really good looking daily chart too.
And by the way, if you didn't want to risk to under the low, and you wanted to risk just based on a failure of a phase change, you can go 2 closes under the 50 and get out.
Yeah, and that's really tight.
Yeah, that's really tight.
All right, let's
All right.
Elf or Alta.
What's that? I'm sorry.
Elf or Alta.
Oh, well, let's go Alta because I think it lined up pretty interestingly there on the 17-week with the weekly chart in Alta. And also, oh, sorry. Um, are you still hearing me? Because I think I just may have,
Yep.
okay.
Yep.
I thought I just
Let me just.
accidentally unplugged. No, I'm still in my mic. Okay. So this is, okay, so I've been talking about Ulta forever. Part of the vanity trade. Look at that beautiful double top it had, and it broke down. But, it got also into major support. It stopped at 330. You had this massive reversal. That was when the story of Buffett was buying came out. Then last week or 2 weeks ago, the story came out that Buffett was selling. It's not even Buffett. I mean,
Oh,
the whole
really?
thing is ridiculous. But nonetheless, Buffett also sold Apple at 185, and Apple's trading at 235 now. So, it's always good to make your own decisions, right? I mean, everybody keeps asking me about the Buffett indicator that this market is going to crash. And, so this is why Jeff and I are doing these, so that you can start to think for yourself, right? So here we go, right? There was that massive support. We broke under it. Next day we clear it. We have this massive move up. And there you go. But look where it stopped. It got through the 17-week exponential moving average. This is what I'm talking about. What we're not seeing with New Skin, we are seeing with Ulta, in that with New Skin, the 50 and the 200-week were so much further than the 17-week moving average. And the 17-week moving average has not been pierced in 2 years. That's not the case here. So the 17-week is interesting, but what's more interesting right here is that 200-week moving average. Now, if you go down after the massive sell-off that we had after the Buffett liquidated thing, we didn't take out the reversal low, so that's always going to be the key area. We're sitting back on support as of Friday's move. Today we had a nice big move up, but we have not cleared the exponential moving average yet. So in this case, I don't know if I'd necessarily be so concerned about that. I mean, maybe if you really love the stock, you might want to buy a little bit there and nibble. To me, what would be far more interesting now is if we get a weekly close over that 200-week moving average. So you were really talking over 400, but don't think that's expensive. This was a stock that was trading much higher. So I think that, you have to make a decision on what kind of trade it is. If it's going to be a real buy and hold, you would wait for that. But I wouldn't be against getting in over the exponential moving average on a weekly close. But again, I would be probably not into a full position because you could run into all that resistance just overhead. So, we're between 330 and 400, 410 on this stock, which is a pretty wide range. But nonetheless, when the moving averages in the range line up, like we saw with retail, it could make for a very compelling trade, especially as we're getting into the holidays.
Yeah. So I'm just going to point out one thing before we go to Elf, because I know what Elf looks like. And that is sometimes this is helpful, sometimes it's not. But if you just kind of box in this trade over the last several months, right? And you're basically sitting in the middle here. Okay. So now let's go to Elf. Obviously, it's not this box, but if we draw a box of how it's been trading, now in this case, it's not the last several weeks, but this thing has been consolidating down here, right? And it's at the upper end of this range. So a totally different picture with just respect to where its support and resistance has been.
And
But
I was one
that's
I
not the main event on this chart.
right.
It just supports what you're about to say.
Well, exactly. And by the way, this was another one that had a massive double top. And, and we were just talking about this, that Muddy Waters went short, heavy short in this stock, probably because they were anticipating some kind of massive Head and Shoulders failure with a neckline break under 100. Well, it didn't happen. And this is a good company. And I actually went on Fox with Charles, my last time with Charles Payne on Fox. He asked me about Elf, and I said, well, I like it. It held 100. I like it here at 105. I think it could go to 150, and I still feel that way. But right now, as we're looking at it on a weekly chart, not only did you have all those bottoms at 100, but we got through really basic like 110-ish. And now look where it is. It's sitting right underneath that 17-week exponential moving average again. So if you missed it, or you bought it and got out too soon, or you want to look at it for the first time, you would have to say, okay, this 129, 130 level is key. It's around that 17-week exponential moving average. I probably wouldn't want to risk too much here, but it looks to me that if we can get through there, now we're really looking at that 150 to whatever that 50-week moving averages
Well,
there.
yeah, here's the 50 week, but you got to look at the 150
Right.
seriously,
Mhm.
because I mean, we've only looked at four stocks and two of them stopped at the one at $100.
Mm-hmm.
Stopped at $100 there. This is 150. I mean, if there's a second message to take from this video is big round numbers matter. So you got to look at 150, especially when it lines up the
Look how
market.
it mattered in Nvidia. I mean, it couldn't get through 150 and now it's trading at like 130 something. So yeah. Yeah. All right. Well, I
All
think
right.
a lot of information. And actually, you know what really helps me too? It helps clear my head so that I can stay focused and not feel like I often feel, just to be human for a moment, like I knew it, or I should have did, I should have, would have, could have. You know, it's not a good thing. There's always another opportunity.
For sure. And these are big, these are weekly charts, right? So these are big moves.
Right.
And this is just one way to look inside the retail space. And actually, it'll be really interesting to see how these develop, especially if XRT continues higher.
Right. And but these aren't the stores. I mean, last week we had earnings, by the way. I mean, Target did terribly, but Ross stores did well, and there was one other big store that did really well. I forget. I know Macy's had done well before that, but it was Ross. And all of a sudden now I'm completely blanking on what the other store was, but that did really well. Of course, Walmart and Costco also did well. So that's why I have pointed people to XRT because I love when you have so much divergence between one product or one store versus another. You look at the whole basket and you get exposure to the heavily weighted ones, and it's a nice way to make some money.
All right.
All right.
Wow. That sounds good. And that's certainly a lot for one video. So
Yeah.
I think we should let people get on with their Thanksgiving week.
Absolutely. Thank you so much, everybody.
All right. Thanks, Mish.
Thanks, Jeff.